Bitcoin mining and real estate quickly becoming a meme in front of us. It's definitely being pushed on a few different angles, whether that just be like mining companies saying, hey, this is like a very clear analogy here in terms of like profits and investment strategy, or just Bitcoin miners themselves who are looking at this and saying like, you know, if I could mine, or I could buy Bitcoin, or I could mine Bitcoin, and mining Bitcoin has a very similar strategy to real estate investments. So can you kind of walk us through how that started, and then through your research, what you kind of found?
So I guess like what a lot of people fail to understand is like how Bitcoin mining like works, and like where the how the cash flow, like where it comes from. So Bitcoin mining machines and real estate rental properties, they're both passive income generating assets that require maintenance. So they also like increase your bottom line as an investor in two ways. So cash flow or asset appreciation. And then both of them, like as cash flow generating assets, they naturally offer the investor some protection against volatility. So like, you know, volatility impacts the total portfolio, but getting that consistent and market relative output from the mining investments makes it an effective hedge. And like with both real estate and mining machines, like you don't have this, you're not seeing the volatility. Like you're not having them priced daily like stocks or bonds even. So I think that's important to recognize, and knowing that where the alpha is that you can mine Bitcoin at a cost significantly below spot price. And if you want to look at it too, like if you're a non-KYC kind of person, like you have to look at the cost, like, okay, I can mine this Bitcoin, or I'm going to have to be purchasing it not only more expensive, but also with a premium.
I mean, it's another cash flow driven business at the end of the day. So there's certainly the similarity there. I think where the mining industry and the real estate industry really start to overlap is when you take into account debt, and seeing sort of the capital markets kind of build out around mining, this ability to get financing against ASICs. Earn a stream of revenue that hopefully is in excess of what you're paying on that debt, makes this a really, really attractive business that you can kind of scale up through debt financing over time. And when you think about it, because, you know, if you want to go buy a house, like Lily mentions in her article, you know, the average price of a home is about $300,000, you know, something like that. It's something, you know, quite expensive. And when you think about all the work that has to go into being a landlord, managing a tenant, think about the closing costs, just having an agent, property inspection, all of these different things that you actively have to work for ultimately what's a lower return on investment. You know, mining, you can purchase an ASIC for $10,000. You can, you could probably make back your money now in 12 to 18 months. And then anything after that is kind of free cash flow. And now with the advent of debt financing, or like payment plan that you guys are now offering through Compass, there's an ability to put down maybe 10, 20%. And then you can start mining today. And as long as that mining income kind of offsets what you would owe for the debt, you're going to ultimately end up making out. Now you can kind of grow a mini portfolio of ASICs or of hash rate and kind of scale that up in the same way that you would with, rental properties, which I think is just super compelling.
Yeah, I just wanted to make one comment too, is that with real estate investing, you have to be more sophisticated. Like you can't just buy any home and expect someone to want to move in or rent it out. And like most of the cash flow from real estate actually comes from the appreciation on the home. So you have to choose like the right market. You have to look at the growth rates. You need to understand the demand of that market. And to do that, you have to put in extra time, but also hire like an agent to help you. And with a Bitcoin mining machine, like no matter where you plug it in, it's going to produce the same amount.